Tech stocks, led by semiconductors, are trouncing the rest of the market. Now, Thursday, for the first time since the dot-com bubble bust 2 decades ago, the tech sector surged nearly 4%, while the equal-weighted S&P 500 finished in the red. Lots of disparities popping up in this bifurcated market as we approach the debt ceiling X-date. We have here with us Yahoo Finance's Blikre to break it all down.
That's right, and we have two major themes here. As you noted, we've had this incredible outperformance by NVIDIA and certain growth tech stocks, especially the mega caps. Meanwhile, we got the debt ceiling looming. We're going to tackle that in a second. Just want to show you what's happening in the NASDAQ today. NVIDIA taking a little bit of a breather, but I'm going to put the market cap numbers here. NVIDIA approaching $1 trillion, now the 5th largest stock in the NASDAQ 100, and it's competing with Amazon now for the number 4 spot. Want to show you year to date just so we have a handle and can wrap our minds around what's been happening here. NVIDIA now up 159%, trouncing Meta, which is also up an impressive 111%. And let me just put this in perspective. The market cap gains that we had yesterday, that was the 3rd largest by any company in history. You have to look at Apple and Amazon back last year. They each gained about 191 billion in one day, but NVIDIA gaining 184 billion, trouncing that Apple record from back in also 2022, Microsoft, and then Tesla gets a spot there as well. So let me talk about the disparity that's popping up in terms of who's getting the hot money. This is the S&P 500 market cap weighted versus equal weighted. So market cap weighted means the higher, the bigger the company, like NVIDIA, which is approaching $1 trillion, the greater the weighting they get. This line, this squiggly line down here, just shows you who's outperforming. Is it the market cap? Is it the big guys? Or is it the little guys all kind of marching together? And we have the biggest disparity here going back to the beginning of my data in 2003. And you go back, you might get some challenges from the dot-com area. And we can express this a number of ways. Here's the NASDAQ 100 versus the NASDAQ composite, 100 stocks versus maybe 3,000 stocks. And you can see we got a little bit of a bump up here. This goes back also, 30, 40 years. But the dot-com bubble crash, just to show you how big these disparities can get, that was much bigger. So things can definitely get more bubbly. But what I want to focus now on is the debt ceiling, because U.S. debt is now riskier than corporate debt for the first time ever, says Bank of America, going back in their data to 1986. This shows you the investment grade. Investment grade yield minus the U.S. yield, and that would be on U.S. government debt, which is supposed to be risk-free. Well, now it's in negative territory, and that's just because of the mechanics surrounding the debt ceiling. We now have 4-month T-bills yielding 6%. There are some bills that are right around the expiration date coming here that people just don't want. So if we fail to get a debt ceiling resolution, probably easily head down another 5 to 10%. We could see 3,800 in the S&P 500. Even if we get a resolution, guess what? The Treasury has to fill its coffers back up, maybe $500 billion to $1 trillion between us and Europe in tightening throughout the rest of the year. So all of this points to increased headwinds for a lot of these stock moves. So can the huge AI-fueled bubble, or is it bubble-ish, that we're watching right now in NVIDIA continue? Well, it depends on what happens with the debt ceiling, but a failure to pass probably means an immediate 5 to 10% wipeout in stocks.
And then if we do get the Federal Reserve raising rates on June 14th.
Well, you want to add another monkey in the wrench?
Right.
Yes. I mean, that's under consideration.
We got flies in the ointment doing backstrokes here.
We got all the analogies.
Analogies, Jared.
Thank you, Jared.
Thank you.